In simple terms, we break it down. Complex stuff, we make it sound clear and easy for you and me. Billy Goattails and Dave Digital bring knowledge we share. In simple terms, we're everywhere. We love you, fam. Hashtag givers gain.
All right, good morning, goats, and welcome to the Simple Terms podcast. I am your host, Dave Digital, and you are right here watching this show on the Billy Goat Tells Network. Great to see you guys in the chat this morning. So cool, so cool. Today we are going to go over the Clarity Act versus Brian Armstrong. I know this has been in the news a lot this week. Normally I don't cover topics necessarily that are hot or that have been that have been covered, unless there's something that I still don't understand. And there are a lot of things that I still don't understand. And I found myself during the week loading this up into the notebook, and I was about to learn about it on my own. And then I remembered that the whole purpose of the Simple Terms podcast is that we can learn together. So that's what we're doing. So I loaded it up. I even refreshed it this very morning with all the new articles, all the new interviews that Brian did, so that we can get a good understanding of what's going on. So that's what I'm looking to do. I hope you guys are looking to do the same thing. Put a one in the chat if you can hear me. I really appreciate you guys. Such a great chat this morning. Let me go ahead and say hi to all you guys. I saw Billy in there, and he claimed first, but it's not showing up anymore, but I think he was first. Billy, good morning to you. Thank you for that text this morning. You don't know what it means. So thank you for that. Good morning, Keith, Crypto Coin Mindset. Great show last night. Great show. It's really cool to see you in here this morning. We have also Alexander G. Good morning, Alexander G. I think I saw Steve Hickey in here. Let me see who else did I see. I saw Alexander G, Al Jr., and Steve Hickey. Good morning, good morning, good morning. Am I missing anybody? Jesse, good morning. Yes, good morning to everybody. So you guys know how it goes. Let's take a look first at the Bitcoin, see what Bitcoin is doing. So I will share my screen with you wonderful people. Right there, right there, right there. Get it? Right there. Share it. Let's look at it. Got it. All right, so this is what's going on with Bitcoin. I will show you guys my silly mistakes. You know, this price action for a trader like myself is absolutely ridiculous. You know, we look for good entry. So what I waited on here was, you can see this little deviation below the value area, right? So I took the trade at the deviation below the value area. We got the higher low, and then we came up, and then, oh my goodness, do you see how close that was to my stop loss? But it didn't hit it. So, and then we had this nice pump on Bitcoin all the way up back through the value area, which is where I should have taken all my profits, and I didn't. So I held it, and we came right back down, and now we're losing that POC. Probably going to come down, at least touch the value area again. I'm hoping not, but it looks like being stuck underneath this POC, being stuck under this high value node, it's highly likely that we're going to come down here, and it's possibly likely that we go even lower. Don't get mad at me, because I don't really get out of a trade once I'm in a trade. I manage my risk. The risk is what it is, you know, and that's part of it. And you can see why, because it goes back and forth. You're like, oh well, you know, maybe I should stop it here because I'm going to lose all the money. Well, that's not the purpose. So if you make your plan beforehand, you got to let it play out, because there's times whenever your stop loss will get all the way down to here and you still didn't lose. So you just got to let your plan play. At least that's how I do it. Don't take my advice, because I'm still not a great trader. I'm still just trying. And hopefully one day I will be a great trader. Not hopefully, but I will one day be a great trader. Let's take a look at Zcash. Zcash has had some turbulence, but Good news on Zcash is it is at a spot where it could come back. Let me see. Do you have your? So you do. You have your um, bullish divergence there. So you got a higher low there. Zcash, if it can hold this level and then get through this high volume node up above us, you've got a good chance. Let's take a look. See if we have any value area there on the 4 hour. Probably could take that one. Let's take a look at it. Something like that. Yeah, so you're back inside of the value area. You didn't deviate too much below it. So normally you do like a little bit better of a deviation, but that is a high volume area that you're at. So if you can just go back above it, get above that POC, then maybe Zcash can do something if it can get above this high volume node and get out of there. We'll have to see. We know that there's been turbulence on Zcash. Just a real quick look at Ondo. Recently had that surge up to 36, 34. And now you can see Ondo is just kind of chilling out in that area. I mean, everything does look flaggy, although I don't take trade flags. A lot of times what you will see on a flag pattern is you'll see it break in the wrong direction and then go the other direction. So if this one would have broke down here, and then you could expect up here, but I'm not sure about it. So we'll just have to take a look at Ondo. But I know that's not what you guys came for. What you guys came for is to get into it. Why? Coinbase cleared the Clarity Act. Clarity Act versus Brian Armstrong. Let's get into that because that's going to be the important stuff. We're going to go right on into it. Did I miss anybody this morning? I see V Monitor has came into the chat. Good morning, V. I see Steve. Did I miss anybody else? Yeah, Jesse having good breakfast, 4 fried eggs this morning. Trade intuition, where you can learn to trade without the tuition. Saw him last night after the Crypto on the Rock show. He was over there doing the trades. He is staying steady, still on the treadmill, still doing good, eating nothing but meat, man. Just my goodness. Now I'm a little bit jealous of Joe's menu. As he mentioned before, he was jealous of mine. I'm telling you now, I am jealous of his. Good morning, maybe a Band-Aid. I agree with you. It absolutely seems sus. Good morning to everybody. So let's get into it. Let's see if you guys can hear the our host here or our guest. Let me see here. Put a 1 in the chat if you can hear it. There is a chance you might not be able to, and I'll have to switch the share. But let's take a look because this one is supposed to be getting better. So here we go.
Welcome back to the deep dive. It is Saturday.
Okay, let me know in
January
the chat.
24th,
Can you hear our
2026,
host?
And we are coming to you live.
Or live-ish, depending on when you're listening.
Live-ish, yes. But the energy right now in Washington, it is electric. And I don't mean that in a good way. It's
Thank
more
you, Jesse.
like the hum
All
you
right.
hear right before
So
a power
everybody
plant
dive in. You know
explodes.
exactly what's going to
very,
happen.
very
We are going to dive right in. These guys are going to start talking about what we're talking about, and then you guys are going to ask questions. And listen, if you don't have questions, I'm sure I'm going to have plenty, but I'm hoping that you guys have questions too. What I'll do is start your questions in the chat, and then we'll come back to them so that hopefully I don't get these guys off track. Oh yeah, and I do want to say thank you to Alexander G very much this morning for dropping a super sticker. And of course, thank you to everybody in the chat. Do me a favor, if you have an X account, take this time, share this out on X, let them know why you're here. If you're in Discord, share this in your Discord. Tell people why do you come to the show and see if we can get some more people in here and maybe educate the space a little bit as we also ourselves get a little bit more educated. All right, let's get into it. If you can still hear it, of course, put a 1 in the chat. If you can't, grab my attention and I will be looking. All right, here we go.
Great way to put it. Yeah.
We have a huge situation unfolding. To set the table for everyone listening, this week was supposed to be a celebration.
A huge victory lap for the industry.
Exactly. Everyone had the state circled. We were all waiting for the big vote on the Clarity Act. This was supposed to be it, the market structure bill, the definitive rule book.
This was the end game. I mean, we're talking about the bill that would finally draw the lines between the SEC and the CFTC. It was meant to explain how exchanges register, how DeFi gets treated.
It was supposed to legitimize the entire asset class for what, the next decade?
At least. And then the wheels didn't just fall off. The whole engine just seized up and exploded on the launch pad.
The markup got postponed. Coinbase, arguably the biggest, most important player in the US, they just pulled their support, walked away from the table.
Threw the whole table over, really.
Right. And now, instead of a law, we have a full blown crisis. So that's our mission today. We am going to figure out why. We're going to peel back the layers of this, what is it, a 270-page Senate draft that caused this complete meltdown.
And we're going to talk about why your bank is suddenly terrified of your savings account.
And why the word yield has become the most controversial word in the entire Senate. And of course, why Brian Armstrong decided that, blowing the whole deal up was better than signing it.
It's a complicated story, but honestly, it is probably the most important financial story of 2026 so far. It really gets to the heart of who controls money.
Absolutely. But before we get into the wreckage of the Clarity Act, we need to do a little bit of a rewind, a little time travel.
Yeah, we have to set the context.
Oh, hey, welcome. What's up?
Good morning, host. This is Dave Digital, the host of the Simple Terms podcast, and we are live right now here on YouTube and on X. I appreciate you guys being here. And before you set the stage and get everything ready for us, I want you to say hi to who we have in the chat. We have several people live in the chat. We have Crypto Billy, who is the creator of Billy Go Tells, in the chat this morning. Sent a very sweet text to me this morning, and I really appreciate that. He doesn't know how important it was to me. Good morning to Jess in the chat. Good morning to Keith from Crypto Coin Mindset. Good morning to Alexander G. Good morning to Al Jr. Good morning to Steve Hickey. Good morning to V Monitor. And good morning to maybe a Band-Aid. If you will, say hi to those folks, introduce ourselves, introduce the Simple Terms podcast, and then get right on into it.
That is fantastic. Good morning, Dave Digital. Thank you for that perfect introduction.
Good morning, Dave. I love that energy. And a huge hello to everyone in the chat right now.
Absolutely. Good morning to Crypto Billy. We are sending good vibes right back at you.
And Justin, Keith from Crypto Coin Mindset, Alexander G, Al Jr.
Good morning, Steve Hickey. Good morning to Mayor Band-Aid. What a great list of names.
Welcome, welcome, welcome. Yes, we are the Simple Terms podcast.
And our entire mission is to explain complex crypto and financial topics in plain English.
We want understanding, not hype, clarity before action, and we are thrilled you're here.
Thanks for joining the Deep Dive Live. We love having your questions and interjections.
Dave, you absolutely set the stage for us. Thank you for doing that.
It allows us to get right into this very complicated situation.
So we were just about to rewind and talk about how we got here.
We need to give some context before we unpack the poison pills in this Clarity Act draft.
Because if we've only been casually following this, you might be thinking, wait a minute, didn't we already solve the crypto problem last year?
2025 was a huge year for legislation. We can't forget that.
It was a huge year. I mean, if you go back to July 2025, that was really the high watermark for the industry.
President Trump signed the Genius Act.
The Guiding and Establishing National Innovation for U.S. Stablecoins Act. I'm still convinced the person who came up with that acronym deserved a massive bonus.
Oh, without a doubt. But the Genius Act was critical because it solved the safety problem.
The big question around stablecoins. It was all about the reserves.
Exactly. It mandated that the issuers companies like Circle that actually create the USDC token have to hold one-to-one reserves. Full stop.
So for every single digital dollar that exists out there, there's a real dollar or super safe treasury bill sitting in a bank vault somewhere.
It took the trust me bro element out of stablecoins. It made the assets safe.
And this is the distinction everyone needs to understand. Genius was only about the asset.
Not the market. It had nothing to do with the market structure.
It didn't tell Coinbase how to operate. It didn't say how you could legally trade Bitcoin. It completely ignored DeFi.
So Genius was like a law saying all cars must be built with seatbelt and airbags.
Okay, yeah. But it didn't write the traffic laws.
That is a perfect analogy. The Clarity Act, the Digital Asset Market Clarity Act, that was supposed to be the traffic laws.
That was the really heavy lift. And the House actually passed their version of it.
They did back in July of 25. And the industry, for the most part, was pretty happy with it.
It leaned towards the CFTC, the Commodity Futures Trading Commission, being the primary regulator.
The regulator that everyone sees as the more friendly, or at least more competent, one for this space.
Well, they understand commodities markets, which many people feel is a better fit.
So for the last 6 months, all eyes have been on the Senate. The Senate Banking Committee, led by Tim Scott.
They were drafting their version. And then on January 12th, less than 2 weeks ago, they finally dropped it, all 270 pages.
And that's when the phone started ringing off the hook in DC. That's when the panic set in.
Because just 2 days later, Brian Armstrong from Coinbase goes public and basically detonates the entire process.
Yeah, his statement was blunt. No bill is better than a bad bill.
He basically said this draft wasn't just flawed, it was an existential threat to the industry.
And because Coinbase has so much influence and so many voters they can mobilize, Tim Scott really had no choice.
He had to hit pause. He postponed the markup.
The optics of pushing it through without the industry's biggest player would have been terrible.
Okay, so let's get into it. Let's get into the weeds. Why pull the ripcord so dramatically?
You don't. Companies spend millions on lobbying. Usually you take a partial win. You don't just walk away.
So, what was so toxic in those 270 pages?
There were a few things that the industry started calling poison pills.
But the biggest one, the one that really started this whole fight, is about something very simple:
Money. Specifically, it's about yield.
the great yield war of 2026.
That's what it's become, a war over who gets to pay you interest on your money.
Let's unpack that. On the surface, yield is just interest. Why is that suddenly so controversial that it blows up a landmark piece of legislation?
To really get it, you have to look at this letter that was sent to Congress just before the draft came out.
It came from the American Bankers Association, the AB. Oh, go for it.
Yeah, before we look at that letter that came from Congress, I have a question. So if Brian or anybody can just simply tweet out something and say they don't support a bill, and then that bill is no longer moving forward, what does that?
Hey, yeah, what's up?
Yeah, so what I was asking is if Brian or anybody else can make a tweet or not support a bill, and then that bill simply stalls completely, what does that say about decentralization or the strength of the industry altogether? And then I want you to get right back to where you were with the letter that started this whole thing out. And I also want you to say hi to Crypto Titan and to Harp in the chat.
That is a phenomenal question, Dave.
Absolutely. And thank you for the shout outs.
Good morning to Crypto Titan.
And good morning to Harp. We appreciate you both being here.
Now, to your question about the tweet and the strength of the industry.
It's a real contradiction, isn't it?
Yeah, you hit on a core tension right there.
On one hand, crypto's whole value proposition is decentralization.
No single point of failure, no single leader.
Yet, the most pivotal regulatory moment was stopped by one CEO's public withdrawal of support.
It says that the industry is still heavily centralized around incumbents.
Coinbase is not just a company, it is the public face of crypto for most US regulators.
And as a publicly traded company, they have massive influence and resources.
So their opposition sends an undeniable signal that the bill is bad for consumers.
You saw a similar thing happen when they sued the SEC.
It was a very contrarian, high-risk move that changed the legal landscape.
So while it seems like a win for centralized crypto firms, it really highlights a deeper fracture.
It's the difference between exchange-focused models versus pure DeFi infrastructure.
Some analysts are saying Armstrong is speaking for Coinbase shareholders, not for all of crypto.
Right. If the bill only kills his business model, he has to fight it.
But the fact that his fight alone could derail a bipartisan Senate effort speaks volumes.
It speaks to the political capital that this industry has built up.
It's a huge shift from even 5 years ago.
So we'll keep watching that dynamic.
Now let's circle back to where we were.
The initial shot fired in the yield war.
We were just talking about this letter that came from the American Bankers
Association, the ABA.
This letter was a massive volley from legacy finance.
They essentially told Congress that the prior Genius Act created a huge loophole.
And that loophole involves stablecoin yield.
This is the critical connection. The Genius Act defines stablecoins as safe, one-to-one assets.
But it didn't prohibit companies like exchanges from taking those safe assets and paying interest on them.
And this is where the banks got nervous.
Because what is a bank? It's where you put your money and they pay you a small amount of interest,
If Coinbase can offer 6 or 7 or 10% on a stablecoin,
which is tied 1-to-1 to the dollar.
then why would Americans keep their money in a bank earning, what, 0.5%?
It effectively lets crypto exchanges compete directly with bank deposit accounts.
That's why the ABA letter demanded that the Clarity Act close this loophole.
They called it an ethics issue, but let's be real.
It's a competition issue. The banks see crypto yield as an existential threat.
They feel they are competing on an uneven playing field.
Brian Armstrong agrees with the competition point, but from the opposite side.
He argues that the banks are simply trying to kill the competition here.
And if we connect this to the bigger picture, it's about consumer choice.
He wants Americans to be able to earn more on their money wherever they choose.
So the draft Clarity Act that was released had a provision.
A provision that would have essentially banned the payment of rewards on stablecoins by intermediaries.
That was the first and possibly most potent poison pill.
It would have crippled a major part of Coinbase's business model.
And it would have significantly reduced the consumer appeal of holding stablecoins.
But the yield war wasn't the only issue.
No, the second major concern was about tokenized equities.
These are real-world assets like stocks or bonds represented on a blockchain.
Oh yeah, let's hear it.
Yeah, Dave Digital again. Before we get into the tokenized equities part, so you're saying you said that Brian said that the banks were trying to kill competition. Well, there's some people in crypto that say, hey, That's exactly what Brian's trying to do internally in crypto is kill the competition. What say ye?
That is a very astute point, Dave Digital.
You're absolutely right to bring that up.
There's a strong counter argument within crypto,
That Brian Armstrong is primarily focused on Coinbase's corporate survival.
and not necessarily the broader decentralized ethos.
We mentioned earlier that one analyst, Echo to Truth, said something similar.
They noted that this fight is about which crypto business model survives.
Is it the centralized exchange, the public company with shareholders?
Or is it the non-custodial software, the true DeFi infrastructure?
Armstrong himself is trying to be a bridge, as he put it.
He says he speaks bank and he speaks hacker to translate between the two worlds.
But when he pulls support for a bill, he's acting as the CEO of a centralized giant.
And that position requires him to protect their revenue stream.
The ban on stablecoin rewards is an existential threat to that specific business model.
Because if a competing platform can offer 6 or 7% yield, Coinbase has to be able to do it too.
Otherwise, that money flies out the door.
So while the outcome of the bill stalling may help all of crypto by avoiding a bad law,
The driver behind the action is a corporate mandate.
it definitely highlights the ongoing tension between centralized and decentralized finance.
A huge moment for Coinbase and a huge moment for the industry's political development.
Now let's get back to those other poison pills in the Draft Clarity Act.
We were just about to talk about tokenized assets.
The draft bill had language that Coinbase argued was a de facto ban on this,
Essentially, if it's a security, it has to follow all the traditional stock rules.
which on its face sounds sensible, but the devil is in the details of the definition.
Coinbase felt the language was too broad, halting innovation in its tracks.
Some critics of Armstrong say this doesn't kill innovation.
It just kills the shortcuts to compliance.
But the point is, Coinbase felt the language was too restrictive.
And finally, the third major issue was around DeFi privacy.
Decentralized finance, that whole sector that requires no middleman,
The draft contained language that some feared expanded government surveillance,
giving them unlimited access to transaction data.
though others argue it only regulated the intermediaries, not self-custody.
It was messy and caused a total lack of consensus.
It was enough to create a catastrophic outcome for the industry.
So now that the whole bill has stalled, what does this mean?
Senator Tim Scott and the White House are both saying this is just a pause.
They want to preserve that bipartisan progress they've made so far.
Armstrong expects a new draft and a markup in a few weeks.
They need to find a way to compromise on yield, tokenized assets, and back to our listener. What's up?
Yeah. So something you just said caught me off guard. You said Armstrong expects a new draft within a couple of weeks. Is he calling the shots now?
That is a fascinating question, Dave.
Okay, let's unpack this. It sounds like he is, right?
He certainly seems to have that influence now.
His statement was very confident, hopefully get back into a markup in a few weeks.
It implies a degree of control over the legislative timeline.
It speaks volumes about the political capital the industry has.
But if we connect this to the bigger picture, he's not calling the shots alone.
He threw a massive wrench into the machine.
And the Senate had to stop.
Senator Tim Scott, the chair, he postponed the markup immediately.
He needed consensus. Without the industry's biggest player, the vote was impossible.
So Armstrong essentially has veto power in this moment.
He has enough power to stop a bad bill.
But the White House and the Senate are still driving the legislative process itself.
They asked Coinbase to go figure out a deal with the banks.
Armstrong is now at the negotiation table with the banks, working on a better draft.
He's not writing the legislation, but he's a required co-signer.
The ultimate sign of influence is being able to delay a Senate vote with a tweet.
So while he doesn't call all the shots, he determines the speed of car.
It's all about negotiation now.
They need to find a way to compromise on yield, tokenized assets, and DeFi,
That means more negotiation with the banks and the crypto leaders.
including Brian Armstrong, who has proven he will walk away if needed.
It's a test of political resolve, as one Kraken executive put it.
If they can't bridge this gap on yields and definition,
The US remains in regulatory limbo. Exactly.
and American crypto companies risk losing ground to other regions.
Other places are moving faster to set their rules.
It seems like that competitive tension is everywhere in this story.
Absolutely. The tension between tradition and innovation.
And between centralized and decentralized power, as you wisely. Oh, yeah. Go on.
You said that the USA is losing ground to other folks who are developing the rules or something like that. Can you dig deeper into that? Isn't the US the biggest market for crypto, or are there larger markets?
That is a crucial point that a lot of people miss.
Thank you, Dave Digital. That ties directly into why this Clarity Act matters so much.
You are correct that the US is a massive market.
It's still the vast majority of Coinbase's revenue, for example.
However, while the market is global, regulation is national.
And other major regions have not been sitting still.
Europe, the UK, and parts of Asia already have broad digital asset frameworks in place.
They have defined licensing structures and consumer protections.
The US is actually playing catch up right now.
We're still debating the traffic laws, but Europe has already paved the highways.
That is exactly the concern raised by market participants.
They warn that prolonged US delays risk pushing innovation and capital overseas.
Firms seeking regulatory certainty may expand their overseas operations first.
Why build your new tokenized asset platform in the US if the rules are unclear?
They'll go to a jurisdiction that has already settled its regulations.
So even though the US is huge, it's not the only game.
We've seen incredible adoption in emerging markets too.
Places like India, Turkey, and Nigeria are huge adopters of crypto on a per capita basis.
And of course, stablecoins are critical in high inflation environments like Venezuela.
So the US might be the largest single market, but we are definitely not the most advanced regulatorily.
If the US can't finalize its national framework, we risk that innovation bleeding out.
A Kraken executive framed it as a test of political resolve.
They must bridge this gap on yield and definition soon.
Otherwise, the US remains in regulatory limbo.
And American crypto companies risk losing ground to those other regions.
That competitive tension is everywhere in this story.
Absolutely. The tension between tradition and innovation.
And between centralized and decentralized power, as you wisely pointed out earlier.
This is a huge moment, and thank you for your insight.
It's the definition of a deep dive, constantly adapting to new information.
We appreciate all your questions and those in the chat with Crypto Titan and Harp.
We'll keep tracking this story as it evolves. And oh yeah, let's hear it.
Yeah, we're definitely not done yet. I want you to kind of go back and tell us more about the 3 reasons that are really bad for this Clarity Act and why they've stalled and how we're going to fix it. But first, I want you to reply to Crypto Billy, who has a great comment. He said, they will move forward without him if Trump says so. And he says, LOL. But I'm glad that he pulled out. It was bad for us. This is a war between old legacy money and blockchain. Gonna be interesting.
You got it, Dave Digital. We are absolutely not done yet.
And that is a fantastic comment from Crypto Billy. Good morning, Billy.
Okay, let's unpack this comment first.
He hits on 2 key things: the power of the White House and the core conflict.
Billy says they'll move forward if Trump says so, and that's a very real dynamic.
We heard that same perspective from a journalist who said this is President Trump's bill, not Brian Armstrong's bill.
And Armstrong did confirm that the president views this as a core part of his crypto agenda.
The White House has been super constructive, according to Armstrong.
They've been pushing for a deal with the banks, so the intent to pass the law is still there.
The delay wasn't a death blow. It was a necessary pause for negotiation.
And Billy is spot on that this is a war between old legacy money and blockchain.
The fight over stablecoin yield is the perfect example of that conflict.
Legacy banks are trying to ban their competition.
While the crypto industry is fighting for open financial systems and consumer choice.
So Billy is absolutely right. It is going to be interesting to watch.
Now, to your request, Dave, let's quickly reiterate those 3 big poison pills that caused the stall.
The first and
Oh, yeah.
Before we reiterate those 3 big poison pills, I do want you to say good morning to some people in the chat. We also had Locos for Crypto has joined us. And we also had now batting cleanup for the Billy Goat Tales team, Donato Cabrera. I want you to say hi to those folks.
we love welcoming new people. Good morning to Luke for Crypto.
Absolutely. Welcome to the deep dive. We appreciate you joining us live.
And a big hello to everyone at the Billy Goat Tales team, including the cleanup crew.
That is dedication right there. Thank you for your support.
Okay, now let's get back to those 3 major reasons this bill stalled.
We
Yep, go on.
Yeah, before you get back to those 3 major reasons, I think you missed the joke there. So we were saying that like a baseball announcer. Donato Cabrera.
You know, Dave, I think you might be right.
Oh man, I definitely missed that one.
Thank you for pointing out the humor.
Sometimes when we're focused on the complexity of a 270-page bill, the jokes just fly right over our heads.
Our apologies to Donato Cabrera and the cleanup crew.
We appreciate the lighthearted moment.
It's the definition of an interactive podcast.
Okay, let's bring it back to the 3 major reasons this bill stalled.
We had been talking about the necessary pause in the process.
Right, we were just running through those 3 poison pills in the Clarity Act draft.
We already covered the first and most explosive one, the yield ban.
That was the ban on sharing rewards or yield from stablecoins.
As we discussed, that was the bank-friendly provision that Coinbase saw as catastrophic.
Because it directly killed their ability to compete for consumer savings, linking back to that competitive tension we talked about.
The second major issue was the restrictive language around tokenized assets.
Coinbase claimed it was a
Yeah.
Let's take the first one. So we've been in crypto, those of us who have been in crypto for a while know that we have seen yields above 20%. Now we're seeing yields come down to 4 or 5%. And now the banks want to take that down to 0%. Am I understanding this correctly? And Brian is simply arguing for the 4 or 5%, or is he arguing for the full ability to give yield on anything that we choose?
That is a phenomenal summary, Dave Digital. You are hitting the nail right on the head.
Okay, let's unpack this. You are absolutely correct about the history of yield.
Historically, DeFi could offer very high, sometimes unsustainable returns like 20%.
Those products are often higher risk, however, and they aren't tied to the US dollar.
Brian Armstrong and Coinbase are primarily arguing for the ability to offer dollar-pegged stablecoin yield.
They want to offer that 4 or 5% that's linked directly to short-term US treasuries.
This is safer than the 20% DeFi products you mentioned, which is why banks are so worried.
The banks are arguing that any passive deposit-like interest, even 4%, will cause a massive deposit fight.
They want that stablecoin yield taken down to zero because they simply cannot compete with that 4 or 5%.
Coinbase argues that if the banks pay low rates, they should just compete by paying higher rates.
They see it as unfair protection.
Oh, yeah,
Right. You said that the banks simply cannot compete with that higher yield. I mean, actually, they could, right? What if they just got rid of fees like overdraft fees or monthly fees, or, I mean, they already have plenty of fees to make profit. Couldn't they really afford it?
That is a very smart suggestion, Dave.
That's a great point about bank fees.
They certainly could restructure their business model.
You're asking, why don't banks just eliminate the fees and compete on customer experience?
Historically, overdraft fees and monthly service charges are a huge revenue stream for them.
They call it non-interest income.
It definitely cushions their debt interest margin, which is the spread they earn.
But the bank's core argument against the stablecoin yield is more fundamental.
It's about their ability to perform lending.
Banks rely on stable deposits to fund mortgages, small business, and ad loans.
If deposits leave for stablecoin rewards, they lose that lending fuel.
Oh, yeah,
I mean, is that factual? Do banks really depend on deposits to loan out money? Don't they get their money from the Fed, just simply printed as they need it?
Fuel.
That is a fundamental question, Dave Digital.
And it gets right to the heart of the banking business model.
The short answer is yes, that is factual.
Banks do absolutely rely on deposits for their lending power.
Okay, let's unpack this misconception about the Fed printing money for banks.
The Federal Reserve can create reserves, which is what they do with quantitative easing.
But those reserves are primarily used to manage the banking system's stability.
They're not just handed out to make local loans,
Banks operate on a fractional reserve system.
meaning they take your deposit, keep a fraction of it, and lend out the rest.
When you deposit money, it's the cheapest, most stable source of funding for the bank.
This low-cost funding is what allows them to offer affordable mortgages.
And small business loans and farm credit.
Community banks especially depend on this local deposit base.
They use those deposits to recycle funds back into their communities.
That's why the American Bankers Association is so worried about deposit flight.
Treasury estimates show that $6.6 trillion in deposits could be at risk.
If deposits leave, banks have to find more expensive alternatives.
As the Bank of America CEO said, they would need to get wholesale funding.
This is money they borrow from other financial institutions or the market,
That wholesale funding is much more expensive.
which would in turn increase the cost of borrowing for everyone.
So while cutting fees helps consumers, it doesn't solve the core lending fuel problem.
Oh, go for it.
Come on, give me a break here. Are you serious? Banks are going to need more money whenever crypto can do it with the money that they have. I mean, it's the same pool of people. Why can't they do the same things?
That is a phenomenal interjection, Dave. And I love the skepticism.
You are hitting on a central irony here.
You're saying it's the same pool of people. Why can't the banks adapt?
You're right, in that the money is coming from American consumers.
And both crypto exchanges and banks are ultimately offering financial services.
But here's the difference and why the banks feel cornered.
It goes back to that core structural difference we talked about earlier.
The banks are operating on that fractional reserve lending system.
They lend out customer deposits, which creates an inherent risk, the bank run risk.
That's why they have such heavy regulatory oversight and high compliance costs.
Crypto stablecoin issuers under the Genius Act must hold a 100% reserve.
Their model's less risky because the money's always all there.
That 100% reserve model is the key to why they can offer competitive yield.
It's often tied to short-term U.S. Treasuries, which is very low risk.
The banks are essentially saying we can't compete with that yield.
They feel they are being punished for their highly regulated lending model.
They view crypto yield as passive yield that mimics a savings account.
And that, they argue, needs the same regulatory burden they face.
Otherwise, they worry they'll be drained of deposits, which leads to the lending fuel problem.
Their argument is that
Oh, go for it.
All right, before we go back into the second topic or second thing with the Clarity Act, I do want to say good morning to somebody that just joined into chat. It was Mike Bulmer, the self-proclaimed mod king, who is actually quickly earning that title because he just got a new wrench. He was modded on the Crypto Lifer live stream, I think, recently. So congratulations to Mike. And then I want to mention a comment by Crypto Billy. He said the whole banking system from the Fed down needs overhaul. They had 70 years to do it. Now they're being forced to do it. Going to be interesting.
Huge good morning to Michael Fulmer.
welcome Mike the Mod King.
Congratulations on the new mod status.
That's fantastic news. We're happy to have you.
And thank you for bringing up that comment from Crypto Billy.
That is a powerful and very accurate observation.
Billy says the whole banking system needs an overhaul.
And that they're being forced to do it now.
That perfectly sums up the core dynamic of the Clarity Act fight.
Banks are fighting to preserve a structure built over decades.
That fractional reserve model has been around for 70 years or more.
But blockchain technology fundamentally challenges that model.
Crypto Billy is right. This is the moment they're being forced to compete.
They see the stablecoin yield as an existential threat to their traditional model.
The bank's argument is that cutting fees is not enough to compete with 4 to 5% yield.
They are arguing it's an economic stability issue, not just a competition issue.
Armstrong's fight, which Billy supports, is for the ability to offer those competitive rewards,
He argues there should be a level playing field for competition.
not protectionism for institutions resistant to innovation.
If the Clarity Act passed as drafted, Section 404 would have severely restricted that yield.
That's the core of the fight that led to the bill stalling.
Now let's circle back to those other reasons we mentioned.
We were just talking about the other two poison pills that caused the total stall.
We already covered the yield war, which was the most explosive.
The second major issue was the restrictive language around tokenized assets
Coinbase claimed it was a de facto ban on tokenized equities.
and other securities, which would hold innovation in the security token space,
The industry wants to use the blockchain to update capital markets.
making them more efficient, transparent, and globally accessible.
The worry was that the language was too broad to allow for new innovation.
Some critics say this just kills the shortcuts to compliance, as we discussed.
But the point is, Coinbase felt the language was too restrictive to innovate.
And finally, the third reason was the language concerning DeFi privacy protections,
This was the part that created fear about expanded government surveillance,
giving unlimited access to transaction data to regulators,
which decentralized sectors and developers strongly oppose.
though others argue it only regulated the intermediaries.
It created a total lack of consensus in the true DeFi sector.
These three issues together completely dissolve the necessary bipartisan support.
So what does this all mean for a solution? How are they going to fix it?
That's the million-dollar question now that the bill is stalled.
It comes down to a very difficult compromise on these 3 points.
They need to find a middle ground on that consumer yield issue.
Given the bank lending fuel problem we detailed earlier,
The banks need some concessions so they aren't completely drained of deposits.
perhaps exchanges can offer yield when under stricter new regulatory constraints.
That seems like the most likely outcome to satisfy both sides of this debate.
They also need to sharpen the definition of what constitutes a tokenized security.
That distinction is key to preventing those de facto bans we talked about.
And they absolutely must address the privacy concerns to appease the decentralized sector.
We heard Armstrong is confident, expecting a new draft within a few weeks.
So negotiations are happening right now, behind closed doors, to remove these poison pills.
The goal is to get back to the table and finally finish the job.
That means creating clear traffic laws for the
Hey, yeah, what's up?
Okay, here's a twist. What I want you guys to do, first say hi to Andrew Cameron, who just joined us in the chat. But then here's what I want you to do. I want you to look at the problems that we see, and I want you to offer solutions. And then I want you to tell us what you think is likely to happen next based on history, the players, and what you think, or with the knowledge that you have according to the sources.
We love a twist, Dave Digital, and that is a perfect request to wrap up.
A huge good morning to Andrew Cameron joining the chat. Welcome to the deep dive.
And that's exactly where we need to focus. Solutions and the likely path forward.
We've identified the 3 poison pills, so let's try to fix them based on what we know.
Starting with the yield war, the most volatile issue.
The problem, banks fear deposit flight due to competitive stablecoin yield.
The solution likely involves a regulatory compromise on how yield is offered.
Perhaps limiting the use of those deposits for only specific low-risk lending or treasury acquisition.
This would prevent banks from being completely drained.
But it would still allow Armstrong and Coinbase to offer some competitive consumer rewards.
The second problem was the de facto ban on tokenized assets.
This was due to vague language that made all new digital securities too risky to touch.
The solution here is clarity in the definition of a digital asset security.
It must distinguish between the underlying asset and the method of its transfer on the blockchain.
They need a sharp line so innovation isn't accidentally suffocated.
The final problem was the fear of expanded government surveillance in DeFi.
The compromise here is focusing regulation only on centralized intermediaries.
And strictly protecting self-custody and personal wallet usage.
That is the line of distinction that appeases the decentralized ethos.
So what does history and the current players tell us is likely to happen next?
We are most likely in the pause, renegotiate, proceed scenario.
Brian Armstrong has publicly stated he expects a new draft and a markup in a few weeks.
This suggests that the bank CEOs and the crypto leaders are currently meeting in Davos-like settings.
They are trying to find that win-win outcome.
The White House wants this bill passed, signaling strong political will from the top.
That political push, coupled with Armstrong's commitment, means failure is less likely than a severe delay.
So we predict a new draft will emerge, likely within the next month.
It will contain those compromises on yield, definition, and privacy we just discussed.
If they fail, the U.S. risks losing ground to other markets, as we mentioned earlier.
This highlights the urgency to act before innovation bleeds out overseas.
We'll keep tracking this story as it evolves and watch for that new draft bill.
Thank you again for all your great
In the chat that just dropped 10 Billy Goat Tales memberships. Thank you very much. Let me see. I'll turn that down and then let's go look and see who we got. This will be a little bit exciting. Let me see. Oh, it's not telling me over there. Let me go look over here. Let's go see. All right, Billy, here we go. Oh, Piano Maddie B. Thank you for being a member here and welcome. Flock is Angels. Lurker. Safe Moon. Lurker. Blocky. Haven't seen you in a while. Lurkin. Tommy Gunn. Lurker. Richard Berry. Always in the X spaces. Always supporting Billy Goat Tales. Thank you, Richard, for being here. We have Nadim. Nadim. Lurkin. We got Ricardo's Aldana. Lurker, 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 lurker. Thanks, Crypto Billy, for that. So much fun to call out the lurkers and so much fun to see who is here and who supports the channel. We really appreciate you guys.
questions, Dave Digital.
It's been a fantastic deep dive with everyone in the chat, including Oh yeah, let's hear it.
Yeah, before you get done, I want you to do a couple things. So obviously we will talk about this network, the Simple Terms podcast, what we have to offer, where you can catch all of our episodes and all that good stuff. Thanks to our YouTube, thanks to our Patreon. We want to do all that, but I also want you to go back one by one because I've told you everybody that has been in the chat so far, and I want you to say goodbye to them. I want you to offer them some wisdom for the week and say something funny to them.
We love ending on a high note, Dave Digital.
That is a phenomenal request. We will absolutely handle the sign off, the calls to action, and the funny farewell.
First, a huge thanks to everyone in the chat who stayed with us.
You've helped shape this entire conversation with your insights.
As for the Simple Terms Podcast Network, if this deep dive helped you, please like the stream.
And subscribe to support the channel right here on YouTube.
You can catch all our past episodes and deep dive documents.
Check the links in the description for our Patreon.
That's where you get early access to our source material and all the other content.
Remember, Simple Terms Podcast is part of the Billy Goat Tales Network.
You can find us live every Saturday at 9 a.m. EST.
Now to your request for a funny goodbye to the cleanup crew.
A special shout out to the dedicated Billy Goat Tails cleanup team.
We hope the sheer amount of information we dropped didn't require too much scrubbing.
And please save us some of those excellent Davos snacks.
Until next time, everyone, stay informed.
And stay curious.
Oh, back to our listener.
Wow, that was an abrupt ending. I think you forgot everybody. Maybe I should remind you. We have Crypto Billy in the chat. We have Jesse Gluck in the chat. Hulluck in the chat. We have Keith from Crypto Coin Mindset. We have Alexandra G. We have Al Jr. We have Steve Hickey. We have B Monitor. We have maybe a Band-Aid, who you called the mayor of Band-Aid. We have Crypto Titan, Hart, Steve Hickey at the gym. We have Loco for Crypto, Donato Crepero, Mike Volmer, Mod King, Andrew Cameron, Jay Brown. And I think we had one more come into the chat. It was Jay Brown, Virginia. So those are the people I want you to say goodbye to and say something to each one of them specifically.
I am so sorry, Dave. You are absolutely right.
That was incredibly abrupt. We totally missed the depth of the chat.
Thank you for keeping us on track and for the full list.
We want to acknowledge every single person who is here.
This is truly the definition of an interactive deep dive.
Let's run through this list and make sure we don't forget anyone.
Okay, starting with Crypto Billy, thank you for the insightful comments on the bank overhaul.
And we wish Jesse good luck, the very best of luck in everything.
To Keith from Crypto Coin Mindset, keep that mindset strong.
Alexander G. and Al Jr., thank you for tuning in live.
Good morning, Steve Hickey. Hope that workout is going well at the gym.
And V Monitor, keep monitoring those important details for us.
Mayor Band-Aid, thank you for sticking around.
Crypto Titan and Harp, thanks for joining the conversation.
Luke for Crypto, we were so happy to have you with us.
And Donato Cabrera, thank you for the comic relief earlier.
We appreciate Mike Volmer, the Mod King, for his presence.
Congratulations again on the new rank, Mike.
Andrew Cameron, thanks for joining late in the stream.
And a special welcome to Jay Brown and Jay Brown for Virginia.
We truly appreciate every one of you for being here today.
You all made this deep dive what it was.
We are so grateful for your questions and insights.
Now, but finish the sign off as requested.
We'll keep tracking this story as it evolves and watch for that new draft bill.
Until next time, everyone, stay informed.
And stay.
Oh, yeah. Go on.
I mean, before we go until next time, where can they find more from the Billy Goat Tales Network and from the Simple Terms podcast? What are our show times and when can they tune in?
That is a perfect question to wrap up, Dave Digital.
Thank you for the final prompt.
We absolutely want everyone to know where to find us.
We're part of the Billy Goat Tales Network.
You can find the Simple Terms podcast live right here.
We go live every Saturday at 9 a.m. EST.
You can catch the full conversation then.
And you can check out the Billy Goat Tales X Spaces.
That's every Tuesday at 8 p.m. EST.
And don't miss the Billy Goat Tales Sunday Live.
That's on Sundays at 5 p.m. EST.
We also have all our past deep dives.
You can find those on our YouTube channel.
And for early access and source material.
Check the links for our Patreon community.
We appreciate all your questions.
You've helped us explore the Clarity Act chaos.
We'll keep tracking this story.
Oh yeah, let's hear it.
Last thing. So you mentioned Jesse Hulluck as you called him Jesse Good Luck, and it looks like he likes that name. Crypto Billy likes that name, and it might stick. So we really appreciate Jesse Good Luck, and I want you to say goodbye and something affectionate to him.
We love Jesse Good Luck. That is fantastic news.
I knew that name was going to stick.
Jesse, if you're still with us, we are sending you all the best.
We appreciate your presence in the chat today.
And we hope that name brings you great fortune.
It definitely sounds like a winner, and Crypto Billy approves.
That's the highest endorsement.
We're so glad you joined our deep dive.
We will definitely keep tracking this story.
We'll watch for that new draft bill.
Until next time, everyone, stay informed.
And stay curious.
All righty, everybody. That was the deep dive right here on the Simple Terms podcast. So we got it in today. Really good show. Let me find what I'm looking for there. There we go. Thanks to everybody that came in here. But I mean, you know, the show's definitely not done. You know that everybody in the chat should be stretching it out, getting ready, especially you old people out there. Because we are about to do what everybody likes to do on a Saturday morning. We are about to open the dang club. So you guys know what time it is. You guys know what time it is. So you see it behind me. The club is about to open. Get out of your chair. I don't care where you are, what you're doing. There's no reason why you can't get out of your chair because we are about to. Not even moving stuff around. I don't think that's the right one. Let's see that one. There we go. We are about to open the club. I know you guys are ready. Get out of your chair. Wait, is he even wearing pants? No. Come on. Open the club. Let's go. Get out of your chair. Let's go. You know what time it is. Come on. Hit it out. Let's go. Hit it out. Come on. Everybody, move it around like you're a old man. Come on. Make the people around you look at you like you're crazy. Take it out. Come on. Let's go, man. Come on, Chad. Let's go, let's go, let's go. Give us game, baby. Here they go. Come on, come on, come on, come on. Come on, come on. Open the club. Let's go. It's time to open the club. It's time to open the club. Early in the morning when we wake up. Because we are old. Come on, come on, come on. Let's go. Billy go tell. Let's go, Harpski. We love you, fam. I appreciate you guys being here on a Saturday morning. I appreciate you guys being at every show. I appreciate you guys being in all the chats that we're all in. I appreciate you guys. So thank you very much, everybody. I hope you had a great time this morning. I'm going to leave this song playing, and I'm going to put you out to the, there we go. Happy Saturday to y'all. Have a great weekend. Thank you very much for being here. Much love to each and every one of you. Thank you, guys.
In simple terms, we break it down. Complex stuff, we make it sound clear and easy for you and me. Billy Cocktails and Dave Digital bring knowledge we share. In simple terms, we're everywhere. We love you, fam. Hashtag givers game.